Pleased to be here tonight. And, I've lived in Zurich myself for 3.5 years and only recently moved to Geneva. Therefore, I still feel very, close to people in Zurich actually at this moment. Today, I'll actually bring a few topics to you. And one is actually the direct impact of the pandemic on our impact investing sector. Secondly, the joint industry efforts that we've taken to counter some of the negative effects. And also, especially what Camilla just mentioned, is our continuous efforts in pivoting to develop new products. Just to give away a little bit here is that at this moment, we try to see how we actually can grow green financing in emerging and frontier markets without any subsidies. And if you have any feedback afterwards, just let me know, because it's very worthwhile to have a conversation with as many people as possible to make this work. Just a bit of an introduction to Symbiotics for the people that don't know us is that we were founded 15 years ago as an impact asset manager. And what we do, simply spoken, is we provide debt mostly to microfinance institutions and smaller banks who are located in actually over more than 80 different frontier and emerging markets. This industry, we use the term MFIs actually for microfinance institutions and smaller banks. So I'll use that term actually. It's the only abbreviation that I'll use today. But otherwise, it's just too long to say the other full sentence the whole time. We mostly advise and manage funds under a white label approach. Currently, we've got 25 impact funds under advisory or management from parties like SEB, UBS, Rothschild, ABN AMRO, and the like. Since establishment 15 years ago, we provided more than 4,000 loans and cumulatively $5.5 billion in loans. At this moment, we've got around 2.2 billion outstanding. We've got offices around the world on each continent, 150 people working for us. And as such, having people also locally on the ground, we've got kind of daily feed of COVID-19 information. So the COVID pandemic and the impact to us is during the early stages of the pandemic, our main business concerns really focused on the liquidity positions of the MFIs that we work with. For them, actually, the asset and liability management is based on the expected demand and repayment of loans. And in many countries, something that you may not know about is that the repayment and distribution of loans, but also the interest payments, really takes place by hand. People move from door to collect the interest and also to collect the loan repayments. Many countries introduce lockdowns. And so with a lockdown, you actually can't visit door to door. And on the other hand, also what we saw is that the underlying businesses that borrowed the money from the MFIs were disrupted. The sales cycles were lengthened, and also the working capital requirements increased. In addition, what we saw is that certain countries and regulators implemented moratoriums on debt repayments. So also that limited the ability of the institution we work with to actually to collect debt. So there what we needed was a kind of an industry approach. And so a large number of the impact investors, they came together to discuss really what collectively we could do to assist the MFIs in reducing actually the likelihood of bankruptcies, and mainly due to the inability of them to collect loans and to collect the interest payments. The impact investments saw that actually we all had a vested interest, because as you may imagine, all these lenders, they provide bilateral facilities to the MFIs. And so for some, we have contractually preferable positions where the repayment was due next month. But for other institutions, because we work with more than 300 different institutions, we were in a less fortunate position. So what we agreed with, I think, around 10 different impact investors, the larger ones, so all our peers as well in Switzerland, is a moratorium of understanding where we restricted to take actually some accelerated actions on non-repayment by the MFIs and to give them a bit more time. And that actually worked quite well for the institutions to give them a bit more breathing room before they needed to repay to us. And I must say, if people ask us, so how many defaults have you seen? Because, you know, how bad has this situation been to us? And I can tell you that we've only seen defaults so far of around 2% of our portfolio. And defaults doesn't really mean bankruptcies. So it means restructuring. It means that new equity needs to come in. So all of that actually is still quite good. It's not too bad for us at this moment, and also for our peers. So, but again, the impact for us is that we've not really experienced a reduction of that demand in the emerging frontier markets in general. But what we've seen is we've seen several new parties actually entering the market. And as such, I mean about local central banks, multilateral and international development banks, and other supranational national institutions that provided a lot of cheap liquidity. So a lot of money flew into the market to support the MFIs, to support the financial sector in emerging frontier markets. So on our side, we mainly experienced a slowdown of the growth of MFIs, and that was mainly the kind of driver behind our own growth, because when MFIs grow, they need more liquidity. So our portfolio would grow, and that's actually what we've seen that has been limited due to COVID, the growth. And we've seen in many countries actually quite a bit of GDP decline. And also what we've seen is something that you may not expect, is actually a decrease of interest rates. And that also shows how the multilateral development banks and central banks moved into the market. They really moved into the market with quite cheap facilities. But I must say, we don't only look at this situation from a negative side. And I will move now a bit to product development, because we've taken the time to further develop new products as well. And one of these new products for us has been the introduction of green, social, and sustainability bonds. And these are all in line with the green and social principles that you're well aware of, and all the sustainability bond guidelines. And if you don't know it, if you Google it, it's just full of it. So you find a lot of information around green bonds, social bonds, and sustainability bonds. What we actually focus on from our side is to work closely together with MFIs to adopt more green standards and to increase green lending, or for projects or certain assets in emerging and frontier markets without the need of subsidies. Because so far the green lending market really was driven by big technical assistance packages from donor funds. So how have we done since then? Because we started with that in the beginning of this year, and since June actually we already issued 2 green bonds ourselves, 2 social bonds, and our first sustainability bond is actually due for next week. And all of them are listed at the Luxembourg Stock Exchange, so everybody can see it and it's fully transparent. As such, we continue to work on impact finance, and we are actually increasing our focus on green financing in a time where a lot of uncertainty remains in the market. But we also believe from Symbiotics that, in a crisis situation, sometimes certain things become fluid, that otherwise we see that these points cannot be moved. And we really hope that this crisis provides us also with certain opportunity to push the kind of green narrative in emerging and frontier markets, because it's a conversation that I myself have a lot also with the larger players in this industry, is that we've seen so many green bonds being issued in developed markets plus China. But what really has lagged behind is the adoption of green standards in emerging frontier markets. And for us, if we want to reach the targets of the Paris Agreement, we need to start including emerging and frontier markets. And this is exactly what, from my side, actually I'm working on, but what we as Symbiotics are working on. So just a bit to conclude, because I know that time is tight, and we are negatively definitely impacted by COVID, but the short-term impact remains very manageable. There's a strong support from the public sector to MFIs but it's lowering private credit demand and also decreasing the interest rates in the market, while risk actually went up. The private lenders work together to really assist the MFIs from an industry kind of perspective. And on the other hand, we ourselves, we continue to really work on our green bonds and green loan propositions to push green into frontier and emerging markets. So that's for me to conclude. Thank you so much for the opportunity to share all of this with you. And I'm looking forward to any further questions. And please do contact me if you have any bilateral questions on this topic.